Okay, well, good morning, everyone. Welcome to today's training session, which is, as you can see from the holder there, all about. Okay. Could I ask you please just to, I've managed to mute a couple of people there. Just check you're on mute because we get a lot of background noise. So let me just kick off again to say welcome to everybody to this this training workshop on basically the roles and responsibilities of individuals who are going to be fulfilling what was the money laundering reporting officer role, now very grandly called the senior management function 17, as part of this new senior manager responsibilities designation. We're going to take an in-depth look at that. Really, this training is aimed squarely at those of you who will fulfill that role. Some of you I know may be already fulfilling that role, and for you, this is just simply a refresher and a chance to retake the IFAC test that's available on the system. More of that in a tick. For those of some of you will maybe becoming new to the role, and are at some stage along the accreditation journey with the FCA, which no doubt IFAC are helping you with. This training is scheduled to run for about 90 minutes, but that will also include you having the opportunity to jump onto the BAT system and to get that multi-choice test out of the way. It's a relatively straightforward multi-choice test. I'm very confident we're going to cover all the information that you need to be successful in that particular test, and more of that as we close out the workshop later. So for those of you who don't know me, my name is Jeremy Hackett. I work very closely with IFAC. I kind of specialise in regulatory training and that kind of thing. Work for a number of different organisations, including IFAC, also a firm you may have heard of called St James Place. So I've got foot in both the IFA and the Tide Agents Camp. I also do some more general business consultancy work with a range of clients, including both Tide and IFA firms, mainly working at strategy, because that's what my master's degree is in, strategic planning. Okay, so that's a little bit about me. This session, I should also point out, is also being recorded, and that will be available as a resource to IFAC on their system. Okay, so off we go. What are we going to be looking to achieve today in terms of our time together? As I said, as part of my opening points, really, this is really looking at the responsibilities required of SMF17s, which are broader than just money laundering. So we're going to understand not only money laundering and terrorist financing and all the good stuff around due diligence and PEPs, suspicious activity, but towards the end of the workshop, for the final kind of 20 minutes or so, we're just going to broaden that out and say, okay, it will be very helpful for somebody in this particular role to have a broader field of vision, a breadth of understanding, not just about money laundering per se and terrorist financing, but also some of the large, broader financial crime potential bear traps and how to mitigate risks, which is, I think, what is key critical in this particular role. So, as you know, the authorities and the FCA take money laundering very seriously. Money laundering, as you know, isn't something that's merely confined to financial services and our day-to-day business as advisors. It's much broader than that. So you've probably been on the end of the requirements as a consumer, because it reaches out into all sorts of different professions, whether it be banking or whether it be, let's say, the legal and accountancy professions. What the FCA have decided is that all firms who are giving advice in the UK and want to be authorised as such must appoint a money laundering reporting officer, as I say, now called the senior management function 17. What are the key accountabilities? Well, I'm sure you all know this, but just so we're all on the same page, it is about ensuring that the firm you are representing, irrespective of the structure, you may be like me, a sole trader, you may be working in a larger organization. Nevertheless, it is your responsibility with your SMF17 hat on to ensure the firm is doing everything it can to comply with anti-money laundering and financial crime regulations. And the key word in that bullet point there is proactively monitoring and applying the firm's systems and controls. So this is not a reactive role. It's not a role that waits for it to happen and then makes an intervention. This is all about making sure that everything is being done to manage and mitigate risks, and that you're monitoring your indicators and dashboard to make sure that the systems and checks and balances are being applied and that any corrections are being made. Very much this role, not only does it provide oversight, it also should act as a focal point within a firm. This is certainly the case in those of you who work for larger firms, where all roads in terms of money laundering would lead to you. Not least because members in your team, whether they be advisors or back office staff, if they have any suspicions of money laundering in terms of their day-to-day interactions with clients or potential clients, they must know who to contact. So you should be standing there as a focal point, not only for them to contact you, but also for being the owner of the systems, processes that support that. So in terms of what an SMF17, as I've said, you need to be individually authorised. I know probably a lot of you on the call already are. Some of you may be just embarking on that authorisation journey with the FCA. And it's one of the two senior management function roles that the FCA insist that they actually individually authorise. And that's before we can even get on and do the role. Such is the importance that is given to anti-money laundering. And when you read kind of the guidance notes that the FCA have issued around roles and responsibilities, all of which in a tick, when the application goes in, they will be kind of running their slide rule over it and making assessments on whether they believe the individual who's applying for authorisation is appropriately experienced. Now, that doesn't necessarily mean you have to have done the role before, but have you got the knowledge, skills, and experience to actually fulfill the role effectively? Because it does carry a significant amount of responsibility with it. So when we do a deeper dive into the handbook and say, okay, FCA, what are you looking for here? Well, it's a kind of a no-brainer. Are we complying with the firm's AML controls? So we can tailor our controls to fit the kind of business structure that we're running. The key one here is, again, when you make your application, you'll be sending with it a copy of your structure chart. And what they're looking for is to make sure that they believe you have got sufficient authority and independence within the business to fulfill the role effectively and access the resources that you need. So this isn't normally a role that can be delegated too far down kind of the chain without thinking about that, because when anything does go wrong, we need to mobilise at pace and have the autonomy to put sufficient resources in the right seats to manage and mitigate any situations that we've got, and to have some of the more challenging conversations. Okay, I think I've got that. Put my computer now, so I'm not shouting. Okay, so do you have sufficient information to carry out your responsibilities? So again, if you were subject to an audit, whether that be an internal audit from IFAC, or hopefully, fingers crossed, you're not subject to an FCA audit, could you demonstrate that you've got sufficient information? So what does your MI look like? What does your data tell you? What's your dashboard with KPIs on it? Have you got sufficient inflow coming in for you to actually assess what's going on? Be confident that your systems and processes are being adhered to, and that you can discharge your responsibility as well. They're also, as I say, you are the gatekeeper, the focal point. You know, it's your responsibility to deal with not just knowledge of, but more importantly, suspicion of money laundering, more of which as we get into the workshop. So if in doubt, do something about it. Don't just let it ride. And as I say, an indicator of why you need to be relatively senior in the structure and have good experience, because when and if you do need to report suspicious activity, then you will be liaising typically on a one-to-one basis with the National Crime Agency and maybe even the FCA as well. So somebody who is able to have those conversations at the right level, and therefore has got the right level of knowledge, skills and experience to execute the role. So as I've said, this role used to be called, and those of us who work in the industry probably still do call it, the Money Laundering Reporting Officer. It was brought under the umbrella of senior management functions. Just as again, I'm sure it's a reminder to you all on the call this morning that the FCA do require every SMF role. So it's an SMF17 role. You will need a statement of responsibilities, and I'm sure you've got that in place at the moment. And it really just outlines the responsibilities and accountabilities you have as a senior member of the firm. But pertinent to your role as SMF17, you must also include some prescribed responsibilities. So I've given you a flavour on the previous slide of just what some of those prescribed responsibilities might look like. I'm not claiming that list is totally exhaustive, and you've maybe got, you know, a side of A4 in terms of your prescribed responsibilities, because they are very specific to you in that role as SMF17. Again, for those of you who are going through the authorization process, that's the part of the application process that the FCA will be really scrutinising quite hard. And I would also say that's a balancing piece as well, because you, in terms of making sure you're comfortable for that to be submitted, because with the privilege of responsibility also comes the duty of kind of accountability too, because if anything were to be untoward and you to either even inadvertently breach FCA or anti-money laundering requirements, then not only will the firm be held to account, but you as an individual can be held to account as well, with the full force of the law behind that. And that is why, you know, congratulations, you're on the training today, because it's important, even if you are doing this, just to keep your sword sharp, to keep to the front of mind, even if it's only once a year, that injection of what I'm actually doing here in terms of my accountabilities and responsibilities. What am I on the hook for here, if even inadvertently, not necessarily through your own actions, it could be an action somebody within the team, but because you're overall accountable for it, I'm afraid the buck has to stop somewhere. And that's the whole intention of the senior management regime, for the FCA to be able to reach through and actually hold not only firms but individuals to account. So in terms of prescribed responsibilities, giving you a flavour, here's some more you might want to have a think through. I'd say that, you know, you need to be owning the controls and systems for the firm. You know, take responsibility for developing them, check and test them, make sure that they're fit for purpose as things move Are we moving our policies? What are we learning from our interaction with clients? Some things will be working really well, some things probably less effective. What are we doing as a business? Is there anything that even inadvertently we're doing internally that may have got in the way of what we're trying to achieve? Has there been a change to any legal guidelines? So again, another measure of this proactivity, if you like. In terms of money laundering, when you're wearing this hat, obviously, as I say, all roads lead to you. And I would suggest that it's you who take the lead on giving guidance and maybe even training to relevant staff. So I know a lot of SMF17s I work with will take it upon themselves to, at least on an annual basis, to make sure everybody within the business is up to speed, maybe do a little training session, have a test to make sure that all the staff are aware of their responsibilities. And of course, when you have new joiners into the business, to make sure that this is included as part of their induction into your firm and what role you play in that. This proactivity again in terms of what may pose as risks, how do our policies, systems and procedures fit with that? You know, are our business practices squeaky clean? Now, when's the last time you actually stood back and did an audit of them? Would you be happy if IFAC were to come in on Monday and do a standalone audit? Everything would be as you would want it to be. So as well as that forward-facing kind of responsibility on a day-to-day basis, what are you doing in terms of making sure day-to-day everything is as it needs to be? What's your MI suite telling you? Yeah, and if necessary, if you are involved in reporting suspicious activity, you need to be liaising with whatever kind of external authorities and agencies you need to at any moment in time. And also maybe or maybe not working in conjunction with the SMF17, or maybe you have that kind of dual roles compliance as well as money laundering, making sure that we're all working within the risk appetite of the business and meeting our overarching kind of regulatory requirements, not just focusing in on money laundering, as I've said, taking note of wider financial crime and risk management in the round. So again, not saying that's an exhaustive list, but it could be worth just again pulling out your prescribed responsibilities. If you're already enrolled, looking if it needs to be refreshed in any way. Those of you who are going for authorization, making sure there aren't any obvious gaps in what you're trying to do. So in the course of the last 20 minutes, all we've really done is just kind of positioned this SMF17 role. We've said that, you know, it's senior for a reason, for all the reasons that we've outlined, and we've just refreshed ourselves in terms of responsibilities and accountabilities that go with this role and where they kind of sit within business. More broadly, again, I'm very conscious for everybody on the line, you probably have this definition done to death, but just to get us all in the same page, you know, money laundering isn't just transaction. I think that's the key point to take off this this first bullet. It's not just a transaction that takes place. It's actually deemed to have taken place if a relationship is formed that involves crime and any form of property. So even if we haven't got to the point where kind of the deed is done, the transaction's taken place, the very fact that we're in a relationship prior to that is actually deemed by the regulatory authorities as money laundering. And when it says any form of property there on the first bullet, you know, the definition of property is very, very broad. As you can see there from the second bullet, it's defined as assets of every kind, including legal papers, which give title to assets. So for that, you know, a lot of people associate money laundering with being what it says on the tin, you know, wads of money. Yeah, it could be bearer bonds, it could be deeds, it could be registration documents to vehicles, anything that legally confers ownership to somebody, whether it's hard currency or not, under the money laundering regulations, is defined as an asset. It also includes assets that have initially been obtained through criminal activity, which are then exchanged for assets that are ostensibly clean with no obvious link to that original criminal activity. And here again, just because money laundering isn't confined to financial services and our advisory space, it goes across the whole economy. From time to time, we see media reports of typically drug dealers who've had all sorts of assets impounded, cars, flat screen televisions, properties, etc., which essentially on the surface would look clean, but they'd been obtained through criminal activity, and the proceeds of that criminal activity laundered through the system. Nevertheless, it once identified and prosecuted, the authorities can pound all such assets, even if they're clean on the surface. So why money laundering then? Well, I think we've just answered that question, really. It's about moving assets into a system that's legitimate, that have been generated through criminal activities, illicit activities, criminal, terrorist, et al. You can't fully benefit as a criminal until your money is actually in the legitimate economy. And if you think about how tightly regulated we are now, I've been in financial services for the best part of 35 years now. Started my career in the banking sector. And I can remember clients coming into the bank literally with tens of thousands of pounds worth of hard currency that we'd stick into the note counter and then put on deposit for them. You know, it's very difficult to put hard currency into a bank like that these days without facing an awful lot of tough questions. Yeah. Today, transactions tend to be online, digital. People don't like cash. So a lot of criminal activity, particularly if it's drug or terrorist related, does generate large amounts of cash. What typically happens is criminals have front business that look legitimate, where they can wash their cash through. For those of you who, like me, maybe subscribers to Netflix, there's a series on Netflix called Ozark, which you may or may not be familiar with. And that's a very good lesson in money laundering. What we have here is a Mexican drug cartel who are making multi-million dollars worth of profits. Hundreds, if not billions of dollars are being generated each year in the United States drug trade. They are blackmailing somebody called Marty, who's a financial services expert, by threatening him and his family. And he is actually laundering the illicit money for them. And to do that, he is doing things like buying casinos and hotels, anything like that, which is sort of a cash type environment. And he's trying to launder their money. And then once the money is laundered, he's trying to buy more legitimate assets, shopping malls, stud farms, etc., etc., to try and clean up the cash. In terms of money laundering regulations, they've been around for a while now. In fact, you can trace the origins of money laundering regulations right back to the 90s. But where the rubber really hit the road for the first time was back in 2002, and that was with something called the Proceeds of Crime Act. And the Proceeds of Crime Act introduced for the first time actual offences for money laundering. You know, whether that was assisting or tipping off, etc., etc., that brought those phrases into our vocabulary and put effective punishments in place for people who have fallen foul of that. In 2017, the money laundering regulations were broadened off to, for the first time, include terrorist financing activities. And then the current set of legislation we're living with was enacted in 2019. It's been in place for a couple of years now, well, coming up for 3 years actually. And that's the regulations, money laundering and terrorist financing regulations of 2019. In terms of money laundering authorities, as I said, this is not a problem or an issue that's confined merely to financial services. It's broader than that. So not just in the UK, but globally, there's a concern around money laundering. And there's something called the Financial Action Task Force in place, which actually sits as an international regulator and issues guidance to relevant countries. These are typically countries in the big economic countries, the G7 plus some others, around best practice and working together, because money laundering flows across geographic boundaries these days. Money flows across the Atlantic in particular with us. The FCA is the UK's main financial services regulator, as we know, and they take a very active interest in money laundering, hence the reason we're on the training today. And for their kind of guidance, they use the notes that are produced by the Joint Money Laundering Steering Group, that again sits from a UK-wide perspective, and that includes all the people you might think would sit on a money laundering steering group, chairman of the Bank of England, and regulatory bodies, etc., etc. Don't need to get in the weeds of that. When and if any offences are occur or suspected, they're investigated in the first instance by the National Crime Agency. It may be necessary to involve the revenue, because it could be tax evasion as well. And of course, the FCA. The FCA are very good at initiating money laundering inquiries, and then they work hand in glove with the NCA in terms of bringing forth prosecutions. We still, as an industry, haven't got our act in order. I think in the advisory space, very much we have. It's become part of our day-to-day operating processes. It still kind of beggars belief that some of the big clearing banks still have difficulties even today with making sure that they are not even inadvertently falling foul of money laundering. The FCA, as a result of some whistleblowing, found something that they didn't particularly like with HSBC just a few months ago. That was, again, Mexico is the flavour today. That was HSBC were flowing money from Mexico through another country into the UK and weren't doing the right money laundering checks, and they were fined £247 million. So, ouch if you're an HSB shareholder, because that's an input dint in your bottom line profits. So it shows that the authorities do still take this seriously. When you're looking at it on a macro level, they still believe there's room for improvement. But again, whilst they have got sharp teeth and can impose fines and indeed prison sentences that we'll look at in a minute, largely speaking, my experience and statistics would show that in the advisory space, we are largely have the situation under control. Okay. So what do the regulations actually require of us, of you, is in particular as an SMF17? Have you got documented processes in place? It's the same kind of script that we use in all the compliance training that we do. I think we're all familiar with how the FCA work now, much like an auditor. If they can't find documentary evidence that something is actually in place, they assume that it isn't. So have you got documented processes in place to evidence that you're managing risk day to day? What are you doing in terms of your staff training? already talked to that in terms of, by at the very least, you should be leading or facilitating through a third party some training for staff. I think these are the things now that we've baked into our process. We know we need to keep ID now and any other verification checks beyond the client relationship for 5 years. We know that we need to have an SMF17 authorised and in place who has overall responsibility. And the FCA, again, from an evidential point of view, even if you're a sole trader, you need to, it's not an option, you need to have a report in place, at least on an annual basis, to say, I've audited and this is my findings of the audit in terms of how my money laundering controls are working. In terms of other controls, that width of having an authorised individual and an accountable individual in place, again, these are well baked in to our processes now. Are we getting ID addresses, ASAP basically? Are we checking ongoing any identities of beneficial owners if we're working more in the corporate space, which some of you may be in that market? We don't put transactions on risk these days until we've dotted every I and crossed every T. And do we have suspicious activity reporting processes? Are we aware of them? Do we know how to access them? And are our teams, our people that we're working with, aware of that as well? And then just to build on the point about keeping documentation, yes, keep all documentation relating to financial transactions for obvious reasons, identity for obvious reasons, and also keep on file your AMS and your AML process reviews. So as we know, everybody who works in a role such as ours, in a sector such as ours, we actually have an obligation to combat money laundering. We don't need to memorize the legislation, but we are expected to understand what money laundering and terrorist financing is, how the offences that are in place through statute actually affect you as the SMF17 and anybody else within the business, and that you are legally obliged to do those ID checks before you can actually get in and do business with a client. And as I've said, how to recognise and report suspicious activity. So that's kind of the bread and butter back office processes that we need to have in place and what money laundering is. Now we're just going to take a slightly deeper dive into the actual stages of money laundering. I'm very conscious that this is absolutely a refresher for everybody on the call, but nevertheless might be handy for those of you who need to sit the multi-choice test that's coming up. So have it at the front of our minds. 3 stages of money laundering. The first one, this is where we're trying to get the proceeds of that illicit activity and get it into the system. Yeah. So this is going back to my Ozark example. Money, illicit funds have been generated through the sale of illegal narcotics, through drugs in the US. The drug cartel have passed that money to Marty. He's trying to place it into the financial system. He's getting into that casino, which deals with lots of hard cash. Yeah? And then the next stage in all of that is to try and muddy the waters, for want of a better word. It's trying to say, okay, the money's gone in there initially. Let's now try and put as much confusion in place between where that money originated from and where it actually ends up. So they tend to put, the people who do this tend to try and put the money through a number of different stages called layering. So remember back to our Ozark example, this is where Marty would now take it from the casino, maybe try and get it into shopping complex, the farm, buying, selling, move on from that asset that looks legitimate into another legitimate, trying all the time to put distance between the original bad money to try and turn it into good money. Because until it's turned into clean money, it's difficult to enjoy the kind of fruits of your illicit activity. Yeah. So when they look legitimate, look like they've come from a legitimate source, now you can start to actually, buy German metal, buy real estate, buy yachts, buy whatever it is that you want to buy as a result of your criminal activity. And your funds look like they're coming from a totally legitimate source. So you can use your black Amex card, you can write out a check, you can have a clean bearer bond, whatever it looks like, deeds to properties that ostensibly on the surface look clean. And that's what it's all about, turning dirty money into clean money, hence the label that was initially coined for this. As I said earlier, the first time rubber really got down on the road around money laundering offences was at Proceeds of Crime Act in 2002. And that introduced 3 specific criminal offences, all of which could result in imprisonment or fines, even for yourself or for people within the business. And these are the things that you need to be aware of. So we're going to go through them one by one and unpack them just a little bit more detail, so that for those of you who are training this on, you can use it with your teams. Tipping off is an interesting one, because this is where that for whatever reason you make the potential criminal, because we don't know at this stage, a potential criminal aware that they're subject to a money laundering investigation. And as a result, because you've done that, that would quite likely prejudice any investigation. Now, the point to remember here, particularly when you're training others through, cascading this down, is even if that is done inadvertently, it's still tipping off. Yeah. So I think what we need to do is to make sure that all our staff really understand what their role and responsibilities is in all of this. If we've got suspicions, fine, we need to get on and report them, but it's absolute taboo and no-no to give any indication whatsoever to the person who is under suspicion, person or persons, that is happening behind the scenes. When and if that is happened and is provable, then that could result in some jail time. So the maximum sentence is up to 5 years, and that could be accompanied with a fine, which is unlimited. So that could be quite a painful experience. Assisting is a big no-no, because with assisting, it's seen that you're kind of aiding and abetting criminal activity because you're involved in some way. And again, it could be inadvertently because you've not got your systems and checks and balances in place, but you could be accused, and that could be upheld of you are facilitating the concealment, conversion or transferring of criminal property and assets. And that's the biggie, because if you are found guilty of that, then it's 14 years jail time, potentially, again, with the unlimited fine. And the final one is one that I don't know why anybody would ever fall foul to this one. It's where you, for whatever reason, fail to report your suspicions to either the money laundering reporting officer, good selves in your SMF17 role, or you fail to report it on to the relevant authorities if you have suspicions. Yeah. So failing to report is what it says on the tin, really. You've got suspicions, but for whatever reason, you don't feel that it needs to be reported on. Once again, you could face some jail time for that, up to 5 years, and it does come with that unlimited fine as well. So I think that for everybody on the call, irrespective of where you are on your SMF17 journey, that would be a refresher, maybe a handy refresher if you've got a test to do. Now, again, I think we're on kind of very familiar ground for everybody on call, because we're looking at our responsibilities for customer due diligence, as it's called. So there are 4 main elements to customer due diligence. The first is we have to do some sort of risk assessment. Now, the great thing about the roles that we do, we work in the advisory space. It's relatively straightforward to determine the level of due diligence we'll need to have with a client, whether this is a more straightforward situation or whether there's something like a politically exposed person, more of which in a tick. Yeah. Not even going to insult your intelligence with client identity. We've kind of done that to death. And again, because we're in the advisory space, our ability to know our client is kind of second to none, really, because if you think about some of the questions we need to ask them appropriately to know them in order to give advice, then that should throw up red flags as we're going through. I guess the thing to remember, though, and particularly for you in your kind of educational role and being the focus of all activity, is that we shouldn't just fixate on that initial contact with our clients, where I think by and large our systems are well established now and kind of well understood by everybody. Also, we need to do it on an ongoing basis. We need to be alert. So typically things like client review meetings or unexpected changes of circumstances should lead us to loop back around. Let's just do another risk assessment here. Let's go dip back into our know your client. So I mentioned briefly there, sometimes there's a need to do enhanced customer due diligence. So if you are assessing the situation and you believe that it's maybe outside your risk appetite, outside the standard risk profile, then you might decide that this is higher risk business and you need to do enhanced due diligence. Certainly in the days of the pandemic, COVID, where it was difficult for people to physically be together, then lots of firms put in place additional checks for ID purposes, yeah, to make sure that this person was who they said they were. So, yeah, driving license, but I need a recent utility bill as well, etc., etc. Yeah. For everybody who's categorized as a politically exposed person, then you are mandated to do an enhanced due diligence check. So as I say, it's about establishing their identity by getting as many additional documents as you want. It hasn't just got to be one. If you want another 3, you can get another 3 because your risk assessment tells you that's what you want to do. You could get documents verified or certified by other financial institutions who, you know, are also subject to money laundering directives. You may want to establish source of funds. You know, where is the money come from? Yeah, where is it currently held? Is there anything that on the face value isn't the normal? Is the money coming from abroad? How were the funds accumulated? Is there a reasonable explanation? Is there an audit trail? Suddenly a big lump of money appears. What's the explanation behind that? Could be a property sale, could be an inheritance, could be totally legitimate. Your job is to make sure that you're happy that you've done all your risk assessment and your enhanced due diligence. And another way to mitigate risk and demonstrate enhanced due diligence is to make sure that any payments, particularly the first one, is coming from another institution who is similarly subject to the same money laundering regulations and directives as yourselves. So it's like another layer of checking. And when there's a very high risk of money laundering, then it's just recommended that you do independent intelligence with that. That's very kind of rare. So I've mentioned 2 or 3 times now politically exposed persons, and I know you would all know who these are, but let's just, again, for the sake of completeness on the training, remind ourselves. So I think we all know that PEPs are individuals who have had very high office in the political arena or the public service arena in the last 12 months. So it could be that they no longer hold the office, but they had office 12 months ago. The other thing is, it's not just that individual. We have to be cognizant of any immediate family members or close associates. Yeah. The reason for this is self-explanatory, really. You know, these are people holding high office who could be targeted by criminals, terrorists, to do things they wouldn't otherwise necessarily do, either through threats to themselves or their immediate family. Yeah. To try and move money, through the system. So I think we're all kind of familiar with who would constitute a pet these days. As I said, you're typically looking at any governmental role, members of the judiciary, members of high-ranking members of armed forces. I would suggest with brigadier and above, or anybody who's got a lot of clout around state-owned enterprises or international organisations. If you have got a politically exposed person as a client, or may acquire one in the future, I would suggest that it's likely that these people will become very apparent to you very quickly by dint of your fact-finding process. For those of you who work in the corporate sector, then you are still required to do your due diligence in identification. The good news is that if somebody is floated on the stock exchange, and that will go right through the FTSE, the 250, the 350, and indeed AIM, you have to jump through so many hoops there that it couldn't be any possible doubt you are who you say you are. So you don't have to do any further ID. If it's a private company, and I know a lot of us in work this particular space, as long as the company or partners, directors within the business are already known to the advisor who's transacting the business, again, no further identification is required. Doesn't prevent us doing business with any company that's not known to us or unquoted. And it's just the common sense stuff, really. Do your credit search, get a bank reference, just satisfy yourself these people are who they say they are, by getting the relevant information around where they were born, their NI numbers, etc., etc., just so that you can be ticking all your internal risk boxes to say, we're happy to do business with them. For those of you who may work outside in terms of local authorities, maybe with charities, that kind of thing, again, similar sort of process, but don't forget there are independent directories that you can draw on as well that list things like local authorities and charities with their registration numbers. And there are specialist consultants who provide that service if you need to call on it. So very, very conscious that for lots of us, that was kind of a refresher in terms of our understanding of money laundering, risks and diligence required within that risk. In terms of suspicious activity, this is something to think through about how you can help your people, because we've said suspicious activity must equally be treated as reportable as where something's actually happened. So what could constitute suspicious activity? So just were 4 key areas we need to be cognizant of: people, transactions, arrangements, and assets. And again, we're going to just unpack those in a little bit more detail now. So from a people perspective, what may you regard as suspicious? Well, dodgy ID. It is possible for people to get hold these days, identity theft and all that kind of thing. So if you've got any hint, suspicion that it's dodgy, it's not legal, it's not theirs, that should raise a red flag, trigger something. I think in our space, we're well used to a process. We're a process-driven industry through our fact-finding processes, etc. And a fact-find meeting, from my observations of them, kind of follow a similar pattern. And it's just where the client isn't really wanting to provide. Now, I know we get insistent clients, and some of them, are unwilling to provide information, but are they more secretive, more unwilling than you would expect? the point here is it's not just one of these bullet points which would potentially trigger. It's another piece in the jigsaw puzzle you're putting together to get you to say, does this all add up? Again, with insistent clients, are they just trying to put pressure on you just to get on, follow their instructions, and they don't really want to go through the full fact-finding process and give you all the answers that you need? If you want to pursue with a client like that, you're perfectly entitled to do so, providing you can satisfy yourself with the risk, or you might decide that that's not something you want to do. If you're ever asked to do something that sits outside of either your normal processes and procedures or what you perceive to be the standard procedures of how other people operate, that again might be a flag. Or because when you are involved in criminal activity and you've fabricated an identity, it's all a fabric of lies, really. If they're inconsistent, if they're contradicting what they said earlier, that may get your suspicions raised. And where it's a client who seems totally unconcerned about what the fees are, what the charges are, whether they can get a better deal. Now, I know there are some clients like that who have bought the service that the firm is offering, and are happy to pay the fees. So again, this is a piece in the jigsaw puzzle. Are they just totally blasé about it? In terms of what might be suspicious from a transactional point of view, you're looking for things, again, that don't follow the regular drumbeat of how we typically transact business. So unexpected changes, last minute changes, things that they want to pursue that aren't in keeping with their risk appetite that you've ascertained, or the objectives that you've put together from the fact-finding process. If they keep going in and out of the market, buying and selling investments, irrespective of what's happening in the markets, and again, think back to why they may be trying to do that layering, trying to move through different things. What's the source of the funds? Where's the money coming from? Is it coming from different accounts? Again, could be legitimate. We need to check it out. We have the privilege of looking at things like people's bank statements and mortgage account statements. Again, is there anything when you compare the two about the movement of money that might raise suspicions? Is money flowing in from abroad where the client has no connection? Yeah, a pal of mine is an IFA. He was working with a client just the other month, actually, wanted to make quite a large investment. The funds were flowing in from Canada. So he went into his enhanced due diligence, and it turned out that the parents of this client had emigrated to Canada. He'd grown up in Canada. Parents were now deceased. He was relocating back to the UK. This was the proceeds of his parents' estate flowing back into the UK. So it was totally legitimate and explainable. Do they go through the calling off and then cancel? Do they want to get their money back? Again, another indication that might be trying to layer on the. What about kind of the arrangements behind the funds? Is there a relationship? Is there a legitimate reason for it? I guess some of you will have clients outside of your immediate geography, and that could be totally legitimate, could be a historical thing. I would suggest it would be very unusual if you were sitting, I don't know, down in the Midlands, and a client was on the phone to you from, say, the northeast of the country saying, I'd like you to be my IFA, please. What is the legitimate reason for the relationship? Could be, of course, they're relocated to the Midlands, in which case, we can start to lower the flag. But if you are contacted out of the blue from a client in a totally different geographical area, that should in some way, I would guess, trigger some sort of suspicion. Is there, when you're looking at their financial activity in particular, something going on there that is irregular compared with what you know about the client, such as large sums of money going in and out when they're declaring to you they work in a role that's paying like 50 grand a year, and you can see lumps of money going in and out? Is there any element to deceive in terms of who's in control of the funds, maybe through private companies, looking like it's hidden behind a charity? Do they hold accounts offshore? Have they got property offshore? Are they trying to flow money from offshore? Does anything just seem more complicated than it needs to be? Yeah. And are they trying always to not give you the full picture, trying to omit or just get you to overlook information that you need as part of your standard procedure? And again, in terms of assets, do the words and music play together here? You know, again, we have the opportunity to get a good handle on our clients. What sort of cars are they driving? What sort of houses, property do they own? Does that tie in with what we know about their income background? Could be, again, totally legitimate. These are just triggers. Yeah. Are they in control of funds that aren't immediately explainable by their business activity, by their occupation? Do they own assets either in their business or other assets that serve no purpose in their normal trading activities? Are they holding assets in someone else's name, but it's clear that they get the control and benefit of them? And this is again something to watch for in review meetings, or this is why I said due diligence and enhanced due diligence can't just be at the outset. Is there suddenly a change in lifestyle, increase in spending, increase in financial pressures? Could be one or t'other, really. So is there unexpected lifestyle changes going on? And have they got a mortgage that, in your view, as a professional financial advisor, is sustainable? Or are they paying mortgages where you're looking at them saying, I don't know how they're affording to do that with all the other kind of outgoings they've got on? So those four areas were just kind of, as I said, trigger points to think of. Think about them as pieces in the jigsaw. They could easily, every single one of them, be explained away by doing due diligence or enhanced due diligence. But again, these are the things to talk to your people about in terms of what may constitute suspicious activity. And it's so important that they're cognizant of that, because as we've seen from our look at the requirements, we are obliged under law to report any suspicions that we have. And if we don't, that's punishable by 5 years or limited fine. So when there are suspicions, then we have to do a report. So in the first instance, if one of your team is concerned that there may be some suspicious activity, they'll need to make a report to you. Now, that will look like you want it to look like. You own the money laundering process, so you'll have a report in as much or as little detail as you want. And typically what everybody needs to be educated in is that where they are suspicious and they're reporting to you as SMF17, then they must stop doing anything in terms of processing business. But of course, don't tell the client, otherwise they're full foul of tipping off, albeit inadvertently. What you need to do is to assess the evidence. So it may be that you need to go back and get more evidence from the initial reportee. Maybe that you even want to talk to the client and do some more enhanced due diligence and check-in to decide on your next course of action. And that very much is on your toe as SMF17s. And this is your decision, and you maybe do that in conjunction with your senior management colleagues to decide whether or not that you want to report it. But ultimately, I want to suggest it is your accountability. This is what you are on the hook for. So you have to own it as part of your senior management responsibilities. Yeah. Are you or are you not going to report it to the National Crime Agency? And my wholehearted recommendation is, if in doubt, do it, so you don't get pinged for failure to report. Okay. But make sure you've done all your due diligence to make sure you're happy to do that. At the point of making the report, and as you know, you do that online these days, it's very easy to find. Just Google it in the normal way if you haven't done already. An online report goes in to the National Crime Agency. And at that stage, there's a box to tick that request their consent for your firm and your advisor to continue giving advance to the client. Now, they always invariably do that because, of course, they don't want to alert the perpetrator that there may be suspicions about criminal activity. So they'll start to investigate, do the appropriate checks, maybe some toing and froing with you in terms of providing them with further evidence. They'll pass the details on to any relevant investigating authorities that they need to involve, whether that be the police, taxman, etc., etc. And as I say, they will typically give permission for you to continue with that. If and when they decide that they want to pursue with a prosecution, typically they'll need to get more information. It's at that point that they'll serve a court order on the perpetrator. Yeah, and that's the first time the perpetrator becomes aware that they're under investigation. If subsequently, as a result of all the investigations, a prosecution ensures, then the good news is, from your perspective and from any member of staff who's been involved in this journey with you, then you can be assured you've got legal protection here. The suspicion report will never be used as evidence in court. Neither will your name or the name of the person who reported their suspicions ever be revealed in court. So you've got cast iron protections there, and you'll never ever be required to appear in court. So as I say, this is when I go back to the previous slide and said I could never understand why you would voluntarily never report and expose yourself to 5 years in prison or unlimited fine, because better to report it for them to say, we've had a look and there's nothing to see here, walk on by, than not. But it's important that you understand that process and that the people who work with you understand it as well. So at that stage, after about an hour, you've kind of done the everything we need to do from a anti-money laundering perspective, hit all the key points, very cognizant for the vast majority on the call. This is merely a refresher to get the information in your head again. And we've prepared you well for those of you who are going to go on and do the test. As I said, just at the tail end of the workshop, what I'm going to do now is just to broaden that out a little bit, because being an SMF17 isn't just about money laundering. To do the job well is about proactively mitigating all risks, not just about money laundering, but wider, some of the other financial crime that may be perpetrated. So as you know, FSMA, good old FSMA, defines financial crime and the offences as being anything around, as you might expect, fraud and dishonesty, misconduct or misuse of information, insider dealing, that kind of stuff, handling proceeds of crime. Yeah, so you can see the obvious parallels to money laundering there. And you need to think about kind of the risks that we live with day to day when we're in business. Again, I'm not seeing any real evidence of it happening in our particular advisory sector, but just the other month, again, one of the retail banks, one of their employees was found guilty of withdrawing money fraudulently, embezzling money from client accounts, and I think they, over the course of a couple of years, got over 100,000 quid out. So being defrauded by employees. So you've got checks and balances in place to make sure that can't happen. There's all your ID processes in place to make sure you're not even inadvertently doing business with people who aren't who they claim to be. Obviously, we've done the anti-money laundering to death. Yeah, we'll look at more specifically at terrorists trying to use us to clean money and get it into the system. And there's a whole piece, we do a full training workshop on things like GDPR requirements, information commissioner, because data is key critical these days, protecting ourselves from scams and being phished for data and identity fraud. So there's a lot going on that that you need to be cognizant of and have checks and balances and processes in place. I wouldn't worry too much about learning the nuts and bolts of these. It's just to really help you understand the breadth of the responsibilities that you've had. Yeah. So the first thing we need to be cognizant of in our roles is insider dealing. For those of you who offer discretionary management services, that may be more relevant, but it's where we're privy to, obviously, information that we may or may not use ourselves or disseminate to a third party. The key points under the Act is that you can get punished whether you use the information or not if you share it. We talked a lot about POCA earlier, key critical for money laundering, or should I say anti-money laundering, and it introduced tipping off, assisting, all that kind of good stuff. We also work under the auspices of the Fraud Act, so we must have our checks and balances in place to make sure we're not inadvertently subject to fraud, or we don't inadvertently fail to disclose information that could be considered fraudulent activity. And again, broad brush, bribery, making sure that we are not seen to be even inadvertently putting ourselves in a situation which could be considered as compromising our situation by way of a bribe. And as we saw on one of the earlier slides, there's been much more firming up from a legislative perspective around counter-terrorism, and we'll look at some of the ways in which the government can directly intervene through the Treasury in terms of trying to freeze the assets of terrorist activity. And then, of course, the one we all know and love so well is the GDPR requirements. So, you know, very well ingrained now into our business models. We're also on the end of this as consumers, as we live our daily lives. Key, but it's also key for us. This is where you're working closely with your SMF17, I would suggest, to make sure that when you do contract out services, as I know a lot of you do, then everything is where it needs to be in terms of third parties processing and handling your data. So I've been talking a little bit around terrorist financing, but I just want to put some meat on the bones. Fairly explanatory what terrorist activity is. Okay. Two main sources of terrorist financing. Some financial support comes direct from countries, we know that. There are certain organisations that exist to raise funds to support terrorist activities, and some individuals choose to support terrorist activities. And just by the dint of the sector that we work in, we could be exposed to some of that. And how do they generate activity? Well, from every activity you could think of, really, whether it's from drug trafficking through to human smuggling, or typical, what I would say more typical criminal activities that may be obfuscated around things like businesses and charities, which is why we talked about enhanced due diligence, and we talked around what you need to do with corporate entities. So it's just something else we need to be aware of. Yeah. So funds that are raised to finance terrorism, as you know, have to be laundered. Therefore, it seemed to be that from the government perspective and legislative perspective, it made sense to kind of join up money laundering and anti-terrorist activity in the same place, where the financial aspects are trying to be laundered through the system to create what looks like legitimate funds for use. Now, I know some of you will be aware of this, but this might be new information for some of you, that if you are having some dealings and you have an inkling, I suggest it's potentially a very rare occurrence, but if you did, then it is possible to get a list of possible terrorist suspects known to the UK. What you may not know is that's actually available from Her Majesty's Treasury, which isn't where you might think you would go for it. So if you've got a spare 10 minutes one day, actually go onto the Treasury website and you actually can find all the people who are on the suspected terrorist list as we sit here today. One of the reasons it sits with the Treasury rather than a law enforcement agency, it's just because the Treasury are the government department that are responsible for implementing sanctions against terrorist activity. Yeah, and what do sanctions do? Well, as you know, basically sanctions are there to prohibit firms from carrying out transactions with persons or organisations, the criminals, who may be resident in the UK or indeed abroad. And basically it prohibits firms from providing any sorts of financial services to them unless they're granted a license to continue the transaction. And we've seen this actually in play relatively recently through the sanctions that have been imposed as a result of the war in Ukraine, where Russian nationals who hold assets, companies, etc. in the UK and elsewhere have had those assets kind of frozen, and they're not allowed to benefit from them. Yeah, so they've had their assets frozen, and we are not allowed to transact business with them. And it also means that they can't say, well, okay, I want to transfer those funds to somebody else then, so that they can benefit from them, because what an asset freeze does is say, no, it does what it says, it's absolutely frozen, so not only can you not have the funds and resources that you own, but we can't have them moved to the control of another designated person either, for obvious reasons. Yeah, so you can't transfer them, you can't alter them, you can't access them in any way, shape or form. Now again, I would suggest that for us who work in the advisory space in our firms, it's unlikely that we'll ever have to do this. And say, I've not been aware of this 35 years into the business, but never say never. The thing to remember here is that if you do need to comply, I think you will be contacted in very short order by the sanctions office. And the only way you can fall foul of that is to not actually implement the order. If for whatever reason you didn't, then you could be looking at jail time of 7 years or a maximum fine of £1 million. I always thought that was strange, in that the money laundering regulations, it's not a limited fine, whereas with its failure to comply with financial sanctions, it's only £1 million. Doesn't seem like enough. The other thing is we may need to be cognizant of, for those of us who work in the more corporate sector, is make sure we're not inadvertently privy to non-payment of tax, which is illegal. It's covered under again, that POCA Act was a big one, and it basically was amended in 2017 by the Criminal Finances Act, and it just said, right, it is now a criminal offence to facilitate tax evasion, even if it's inadvertently. So for those of you who are working in the corporate sector, I know that's why you do much more enhanced due diligence. So it's saying, two criminal offences, if you help them with UK tax evasion or non-UK tax evasion, you could be in hot water. UK tax evasion offence is where a UK-based entity actually evades tax anywhere in the world. Yeah, so it could be a multinational corporation with its base here. Yeah, so the financial institution needs to be incorporated here as a place of business here, but the offence happens anywhere in the world. That's regarded as UK tax evasion. Yeah, non-UK tax evasion, it's where they've not evaded UK tax, but the liability for a corporate offence because they've got a UK connection. Yeah, again, All you need to do to make sure you're complying with this is to make sure that you've got reasonable prevention procedures in place that will judged to be reasonable by a third party looking on them. Yeah, if you want more detail on that because you work in the corporate market, then look on the HMRC website. But again, I suggest we're now kind of skiing slightly off piste. In terms of of bribery, again, we do this just for completeness. So as we know, bribery is any offer or receipt of financial advantage. Yeah. The thing to remember about inducements to try and get someone to do something from a business perspective is that just doesn't have to be money. It could be anything. It could be, if you do this, then we can make you the president of the golf club, or we could put you on the board of this as a non-executive director. So it doesn't need directly to be a tangible asset. It could be more intangible prestige asset. Yeah. So what the Bribery Act said, it's a criminal offence to offer or give a bribe, or to request a bribe, to try and bribe a public official, or for a company to try to having prevented a bribe acting on its behalf. And again, so as an SMF17, you've got to make sure that if you're in a big business, people aren't doing things that you wouldn't want them to do. I'm sure they're not. Yeah, this is just for your awareness. In terms of conflicts of interest, again, think about the sector that we're working in. We mustn't do anything through a conflict of interest that could influence decision making or conduct. You might think, well, this never happens, does it, Jeremy? But indeed, it has happened, albeit recently. And I'm embarrassed to say, in our sector, you'll be familiar with a number of firms that have now been deauthorised, and the owners are subject to criminal prosecutions for having taken funds out of the British Steel final salary pension scheme and invested them in SIPs. Within the SIPs were some very dubious investments that were owned by the people who were recommending the investments, some very esoteric kind of investments, which was clearly a conflict of interest, and are now reaping the whole wrath of legislation because of that. So you mustn't offer or accept payments which are intended to alter conduct or decisions. What does that mean in terms of you acting for your clients? Don't encourage them to purchase less favourable products because you might get a higher fee for it. Be very careful. Don't stay clear of advising them as trustees, holding powers of attorney. Never be an executor or beneficiary of a will. Steer well clear of that. It's all good common sense stuff, really. So all we've done for the last 10 minutes there is say, right, we've kind of done to death money laundering. Let's just, because we're SMF17s and we need to have a wide field of vision, let's just have wider oversight. So in terms of pulling that all together then, money laundering and its associated acts such as terrorist financing are criminal offences. So it's imperative that you understand your obligations as the SMF17. Yeah, it's important that you understand the guidance and the due diligence requirements. So we spent a lot of time looking at due diligence, enhanced due diligence, who is a potentially exposed person. We looked at suspicious activity, yeah, people, transactions, assets, and all that kind of good stuff. It was all about doing that to make sure it fitted within the risk appetite that we want for our business and customers. And we said that it's crucial for you sitting in that NLRO as the SMF17, not only to know how to recognise and report activity, but it's your responsibility to make sure everyone in the firm does too. And we've just finally looked at terrorist financing and financial sanctions, just so that you know that you're responsible for that. I've been bleating on about a test since we started on with the training. you know, even if you don't have to do it, why not jump onto the system and do it? You'll find it in the usual place when you log on to the BAT system. You look under the T&C section, you'll find the financial exams there. It's a multi-choice test. You've had all the information that you need to be successful in that test. I can assure you of that. You'll also find, before you take the test, if you want further refresher, a range of very helpful documents that are there, which are good as memory joggers and aid memoirs, and things that you may want to use if you're going to be training your staff as well. I believe there's also a video posted on there of a previous session of this that we ran as well. So at the start of the training, I went through the learning objectives. Let's just go through and make sure we can tick them off. Do we know the oversight responsibilities required of an SMF17? We went through the oversight, prescribed responsibilities, etc. Do we know our responsibilities for compliance with money laundering and terrorists? Hopefully we do now. We looked at due diligence, enhanced due diligence, PEPs, suspicious activity reports, and how the breadth of financial crime offences might affect us now to mitigate them. So I think we can safely tick off all of those objectives. For those of you who would like to get some CPD accreditation for having attended, no problem. I'll just pause for a second there for you to either take a screenshot or a photo, or write down that email address there, and I'll endeavour to get that back to you just as soon as possible with a 90-minute accreditation on it. For those of you who are required to be accredited, my suggestion is now you're expecting 90 minutes in your diary. If I stop speaking soon, you can jump onto the BAT system. That test takes about 5 minutes. So without taking any more time out of your diary, you can get yourself done and dusted. Okay, so for now, that is it. Thank you very much for this morning. I'll see you in a couple of weeks' time for the next training session. But for now, I wish you all a very good morning and an enjoyable rest of the day. This is Jeremy signing off. Goodbye, everybody.